The high-level expert group on scaling up sustainable finance in low and middle-income countries has just presented its final recommendations to the European Commission. Professor Kenneth Amaeshi, who is a professor here at the Florence School of Transnational Governance in Sustainable Finance and Governance, he was part of this expert group, and we're asking him some questions about what this all means. So, Kenneth, welcome to the studio. You joined this advisory group back in September 22, and you have now presented your recommendations. And I went through the document, and there are quite a lot of them, right? There's a lot there on sustainable investment, finance, mobilizing private capital in low and middle income countries. What are the most important initiatives and the most important recommendations in your view?
I think it's difficult to say, but in my opinion, what I thought was a very good one that will make a lot of impact is about de-risking, because this is about how to mobilize private funds into sustainable projects and initiatives in low and medium income countries. We know clearly that the public money can't do it alone. We need a lot of money, and some people have argued that it may be up to $3 trillion annually before 2030 to do that. So we need significant amount of money from the private sector. But the private sector funds are not flowing into low and medium income countries because of perceived risks. And investors shy away from risks. They try to minimize their risks. So one of the critical outcomes of this conversation is how the European Union or the Commission can step in to help mobilize other actors also to de-risk some of this investment. The risking here means absorbing some of the initial risks so that private capital can really flow in, especially in the very early stages where projects are being articulated and we don't know exactly how they will materialize.
Yeah. So how would this de-risking work in practice? Could you give us an example?
It might be that a bank or an investor wants to go into a large-scale renewable energy project in an emerging market, right? So there are some basic things that will need to be done. So due diligence, assessing the feasibility of the project, whether there is demand for it or not, and where we think that demand is low initially, it could be that the government or the EU or any other public body may want to take the initial risks in terms of even providing initial funding or agreeing to pay for a number of years before the project starts to make money. So in that case, the private sector funder would be at least encouraged. So in other words, the public money is willing to take the initial loss, assuming there was one, so that the private actors can then see it as a profitable venture.
Yeah. Of course, the word sustainability was at the heart of the reflections of this group, right? And one of the things that is also in the report is the proposal of green bond markets in low and middle income countries. How can the EU facilitate the development of these markets?
Green bonds in themselves are required it's a way of mobilizing capital to support green projects or green investment in whether it's in the global north or global south. So the point here is that the market for green bonds needs to be robust enough to accommodate new entrants and also provide the sort of capital mobilization of capital from outside the low and medium income countries as well as from within. So here we're looking at domestic mobilization of funds to support projects, because that's one way to guarantee sustainability. So the money is not all coming from outside, but through green bonds issued in local currency. Sometimes some of these bonds are issued in foreign currency, which may also have currency or exchange rate risks. But if they are issued in local currency and there are enough guarantees or safeguards to protect the investment, then it will enable the market to flourish. So that's part of the suggestion being made. So as much as green bonds are good, so the market for it should not in itself be risky and volatile. And one way to stabilize it is to have a combination of foreign and local currencies guiding that conversation.
Yeah, excellent. So there is also a lot of language on building local capacity, right? In this report, in particular through technical assistance to low and middle income countries. What kind of form and shape could that take?
Because sustainability or sustainable finance in itself is a new practice or discipline, one of the things the report flags is that there is low or inadequate, in quote, capacity. Some of the actors in low and middle income countries do not have the technical expertise to put together projects that would stand the test of many investors, especially those coming from the global north. So the question then is, how do we help the countries as well as the finance professionals in these countries to come up with projects that would meet the expectations of those in the global north. So it's that sort of technical support and assistance, which, although the report didn't flesh it out exactly how it will need to happen, but I foresee a situation whereby in future, this might also involve shaping the curriculum of the professional bodies in these countries to enable them come up to speed with it. And beyond that, even in terms of workplace engagement, to come up with robust products and initiatives that will meet this standard. And one of the things I found also in my own experience is that you go to these countries, on one hand, the owners of the projects are keen to do something. On the other hand, you find, say, for example, the investment banks who are a bit slow in coming up with some of these products, and sometimes they look towards the people in the legal space. So there's some kind of institutional innovation that needs to happen, especially between the lawyers and the investment bankers to unlock some of these opportunities. But then this needs to happen within a safe institutional and regulatory framework.
Yeah. I think kind of, throughout your answers, you've already kind of describing kind of the challenges of sustainable investment in low and middle income countries. I'm wondering, since, you've been together in several rounds of discussions with a group of experts with different backgrounds, what were kind of also the key challenges, maybe also some of the issues that it was difficult to find an answer to in your deliberations?
I think, I mean, like any other, in terms of team formation, you go through different stages. So initially, we thought, or I thought that we came to it from our different professional interests and backgrounds. But as we went through the process, we started to find synergies and coalitions and people agreeing. But one thing that was very central at the beginning of it was that we didn't want to repeat or just recycle the European understanding of sustainable finance. And as you imagine, it's very much dominated by kind of climate conversation, environmental issues. As much as the low and middle income countries need to be aware of the climate risks as well as green issues, but we thought that they also had other concerns like social concerns. And we know very well that the social sustainability framework is still one that the European Commission is struggling with. So it will be sort of a mistake to kind of go to the low and middle income countries with this European template that does not necessarily have at the moment the social dimension. So it's one of the things we flagged up as well that needs to be further developed. But the Commission was kind enough to also recognize and be open-minded about it, which I thought was very fascinating to learn about.
Yeah. This brings us neatly to the next question, which is, how is such a report from an expert group that is delivered right to the European Commission? You say, here is our set of recommendations. How is this actually used by the European Commission going forward?
My understanding is that this is just an input into a process. The European Commission has a way of coming up with policies, and consultation with expert groups is just one aspect of that. So we hope that The recommendations now will go into the bureaucratic system of policy making in the EU and eventually come up well or come out from the other end as something that can be adopted and implemented by the European Commission itself, by actors from the European Union, as well as those that the report and recommendations are targeted.
And maybe to conclude, if there would be one thing that the European Commission should definitely take on board in that policy making process, what should they take away from your report, Kenneth?
I think it's about the domestication of this practice. So we recognize that the European Commission and the Union itself has a very is a powerful actor in the global policy making and standard setting. So, and we know what, this whole thing about the Brussels effect. So whatever comes from Brussels becomes the gold standard to a large extent. So, but this report and the recommendations going out will need to be customized and domesticated in the different countries and contexts in which they operate. And the other thing also to mention is that for the recommendations to be fully realized, there's need for the financial services sector to change its culture. So we can't continue with business as usual and expect a lot to happen. So the culture of sustainable finance needs to be one that is also aligned with some of these recommendations. And I see a lot of investors as well as countries and other actors paying attention to the need for this cultural alignment. Otherwise, we find policies and frameworks flying around, but they don't have the fertile organizational cultures to land on to germinate, grow, and bear good fruits.
I think on that note, Kenneth, we can conclude. Thanks for introducing us to the report of the high-level expert group on scaling up sustainable finance in low and middle income countries. That's a long sentence, a mouthful. Thanks for being with us today. And thanks also to our viewers for joining this latest episode of Governance This Week. Don't forget to subscribe and see you around next time.